The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 18th day of December. Yes, this is really a very key moment because under other circumstances, I'd be looking at this and I'd say, you know, if there wasn't any further news coming out, good news, bad news, doesn't matter, any news coming out, going into Monday, Tuesday of next week, I could see a rebound, a very easy rebound back into it. The Dow's up 284. I could see a nice rebound to the 24,400, the 14-period exponential moving average, and then maybe a pullback, and then another test, maybe even hitting 24,900 by the end of December. I don't have too many trading days. Any real negative news that takes out the low of yesterday of 23456, 23,456. I love these numbers over the last, I would say, 4 months have been amazing. Out of every, I always have to type the numbers in when I do my update for my newsletter when it goes out every morning at about 8:30 Eastern time. My opening call newsletter, and therefore over the evening when the markets close and into the early next morning, I'm busy typing everything onto the charts. And I've been amazed at how many numbers have remained the same in the Dow. It will close, and for instance, the other day, it closed up 500, was it 500 points? Yeah. And all I had to do was change two symbols, and everything else was the same. Doesn't matter. These are just coincidences. Now, what I'm looking at here is that the Dow has taken out the low in the weekly chart, these rectangle formations. It's taken out the low on the left side in each of these H patterns. And that's very important because to get back into the actual body of the X, of the rectangle formation, left side support, 24,122 is really important to achieve. And I would have to say that it needs to achieve it not by the end of December, but it needs to achieve it by the beginning of sometime early next week. And that would say good. Now, when I look at a number of the stocks, the reason why we went long yesterday morning you remember, as I was talking on the show, I said we were long. We were two positions we wanted long. One we did get, and that screamed to the upside. We got the Dow almost at the very bottom through the diamonds, and it screamed up 300 points, but then it went all the way back, and then it picked up the missing link. It's like, you know, you're at the station, the train goes off, and someone was left behind. Well, what was left behind was a position we wanted in the NASDAQ, and the Dow went all the way back with the other indices, picked up the missing link, and then took us out, just took us out, and then it rallied, and look what it did today. But we are in. It's okay. We've managed. I said we will buy any dip, and we got certain prices, and we're okay. I don't mind. Not as aggressive as yesterday, but we're long. Now, this is what I'm thinking. Under the circumstance, let me just run the numbers. The Dow's up 288 because we've got a guest today. I'm thrilled to say that I'm hoping that Larry Pesavento is going to be able to call in. He wasn't able to do his show this morning, and I know that for him, just like for me and most of the others here at TFNN, this is such an important period. You don't want to miss a thing. Of course, sometimes doing the show means that I'm not trading, so you miss some real nice opportunities. I know Larry sometimes trades in the middle. I can sometimes do it, but other times I've done it and then forgotten completely that I was in a trade and have gone off somewhere afterwards, come back and say, whoa, what? Yeah. All right. The S&P is up 2570. Up 0.95%. The Dow's up 1.3%, stronger than the S&P. This to me still looks like, regardless of what kind of rally we're going to get, and we're overdue for a rally, we're going to have to do some testing. If you look at these fantastic stocks like Workday, look at this. Had a spectacular move, but a spectacular move to the upside. Just a year ago, it was somewhere in the 70s. Runs all the way to the 170s. Pulls back is at 156. But after yesterday's move, it seems to me that these stocks are needing more time. I mean, look, even an Oracle, which comes out with outstanding, evidently, I didn't hear, but from the price action, it must have been outstanding attributes to the earnings, spirals up this morning after closing yesterday at about 40, somewhere around 46.36. It spirals up to 48.34, and now it's trading at 46.35. I mean, that's not good. Actually, no, yesterday was 45 something. What a big move. And then it gives it back. So it seems to me, regardless of what we see nearer term, we've got a lot of work to do before we can say, okay, now all systems are go ahead for the big move up in 2019. I don't think that happens until the first quarter. I think we're got a lot of testing, look at this, Amazon, just a lot of work to be done to try to repair the damage that's been done. Spectacular moves. I mean, Amazon goes from just a couple of years ago, it was in the 500s, and it screams to 2050. Now it's trading at 1548. It just needs time. Look at the pattern. I don't want to spend time right now. We'll do that maybe later in the week. So here's the other thing I wanted to say is that the QQQ was trading right now at 159.62, up 2.23. Yeah, it's holding well. If you look at the weekly chart, it's kind of holding support on the left side. Didn't break the 153.88 low, but it did take out the 157. That's 153 from April. But it did take out the most recent low of 157.13, went to 156.17. Yeah, it's not a bad candle. It's trading at the high of the day. The NASDAQ type stocks are really oversold. That doesn't mean to say oversold to the extent that they have to have a spectacular run to all-time highs. I just don't think they're going to do that for a while. So and the QQQs has 162 to 163. It's very strong resistance if a real good rally starts to unfold going into Monday. But boy, if it doesn't hold 156.50 support, that 153.88 April low is going to be tested. Let's just go to the IWM, and then we've got the real important stuff that I want to look at, and I'll explain why. Look, the IWM just hit the 200-period exponential. That was my target all the time for the IWM, the 138s with the 200-period exponential moving average weekly chart support. Hasn't, it just touched it right now. So, and the MACD and stochastic are still very weak. Yep, you could start to see a bit of a rally from here, but I suspect that this has got a lot more work to do, the Russell 2000 stocks. Let's go to gold. Gold right now is trading, it was trading up 1. Yep, it's up 1. Hasn't taken out the high of a few days ago. It needs to close decisively above 1257. Let's call it 1258. Is the 200-period daily exponential moving average resistance. The moment it starts to trade in the 1263s, gold is setting itself up to go sideways to up rather than sideways to down. That's going to be a big change, and that's going to help this weekly steady, unbelievably steady, higher highs and higher lows, small little up channel, but very steady with good technicals. And I just want to quickly go to the dollar before we go to the break. The dollar right now is holding very nicely. It was much weaker earlier. It actually hit a low of 96.7. It's trading right now at 97.02. Back at the 97s. I like that. We'll talk more about it when we get back. Basil Chapman, Tiger, this hour. Dow's up almost 300 points. Hoping Larry Pesavent has a chance to call in. Have it very soon.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone. So I just got a message to say Larry is going to, he's running a little late. He hopes to be able to call in. Now if Larry calls in, we always have a good chat together. So a couple of things that I was asked about. EWZ, just quickly, this is the iShares Brazil. Yeah. This is, together with the other, EEM is different to Brazil. I mean, different country, different everything. This is the emerging markets. But they all have the same pattern, and it says to me that they need some time, but they might have already done a lot of their consolidating, and we might be looking at some of the foreign markets beginning to stabilize a lot sooner than maybe the American market. Now, when I'm looking at, let's go back to crude oil. So there's a pattern that I discussed. Remember, I had a call, a coincidental call with in the den, and 2 people emailed me, and I had a call about crude oil. So I had this pattern that I talk about, the inverted Chapman wave stork leg formation. What is a stork leg formation? Well, if you look here, the dollar had a beautiful Chapman wave stork leg formation. This is the pattern. A long series of up moves. It's not any leg, it's not peaks per se. I'm just looking at a very strong, powerful move that then stalls and makes an oval pattern. I actually like it, a long oval pattern. Doesn't matter, but the oval pattern, because if it's a very tight one, then it produces a Chapman wave propeller shaft formation. I'll talk about that in a moment as well. But what happens with the stork leg formation, you go leg, body, neck, beak. When the neck is finished and you start the beak, remember the head is also the beak. When that beak comes down, it very often goes straight to the top and inside the top of the oval pattern. When that's done, if it doesn't take out the bottom of the oval, that's a good sign. If it takes out the bottom of the oval, it means there's a real good chance it's going to go even lower. But if that leg, oval body, neck, beak, if that beak stalls and then turns around and you get a signal that says, aha, there could be a rally, much of the time, when I say much of the time, I'm talking about 88, 92%, a lot of the time, majority of the time, there's a fabulous rally, and then you're on your own. That's the rule. What's the rule? Leg, body, neck, beak, turn around without taking out the body, the low of the oval of the body, and real good rally, and then you're on your own. Doesn't say how long, just is real. You'll recognize it's a rally because it goes, sometimes it goes right above the beak almost immediately. All right. So we had that with the dollar. There's the leg, there's the body, there's the neck, there's the beak. It says beak right there. And then it turned around, held the 14, and the green line is the 9-period moving average. Fabulous rally. Goes to a leg D in the weekly chart. That was what we wanted to accomplish. We've been long since 90, and now it's at 97.04, having hit a high of 97 point, was that 72? No, 71. 97.71 was the high. And that in the daily DXY is G/C, and UUP is the vehicle we have, the trading vehicle, the dollar bull index, ETF it's actually called, power shares DB US dollar bull, and it went to 26.12, peak D in the UUP, leg E, possibly a peak E in the weekly. Isn't it interesting how they didn't quite match? And there's always one little thing that sometimes sits there saying, Anyway, we've done everything, we've accomplished everything we wanted in this phase of the dollar bull. Now let's go back to oil because I want to show you the pattern. Remember the stork leg formation. So what do we have here? I drew this in. I said there's a chance we've got an inverted Chapman wave stork leg formation. There's the leg down. Remember, a stork stands on one leg, and it's got two, but it stands on one. And then here's the oval body, inverted Chapman wave stork leg, and therefore the neck should be below 49.41. Well, lo and behold, today the low is already 47.27. It says that when this is finished, there could be a move back into the oval, which means above 49.41. And then when that's completed, if there is another turn down, that could be a very strong sell mode because it's the exact opposite, meaning crude oil could go even lower. It's already in leg B with terrible technicals in the weekly chart. It's a huge leg E to a peak E with a high of 76.90 in the monthly chart. And it's gone from the 76s to the 47s, 20 points. That is over 30% decline. That is serious stuff. And that's talking about the economy. If I put that together with high-grade copper right now is down. Oh, my goodness, look at this. That arch formation in the weekly. Remember, I've not liked copper at all. Yeah, failing. And I'm putting this together with wood, WOOD. So copper is down 0.09 at 2.6615. If it breaks 2.6 support, I don't know where it's going. So wood is the iShares Global Timber and Forestry ETF. New lows. Oh, my goodness. It's trying to turn around right here. A little green candle after all the red ones. Oh, boy. It had a high of 83 back in June. It's trading now at 58. It had a low this morning of 57.80. Is that a turn down or is that a turn down? And that's really important. Global Timber and Forestry. If I look at the FXI, I did this for my subscribers over the weekend, discussed it in many, many ways. FXI is down 0.21 at 40.34, is trying to form some kind of a support above 39, certainly above 40, but if it breaks 40, it's still got the 39s. You have to watch this really closely. China is as important as the Fed. China is as important as a government shutdown. China is probably because it's our biggest trading partner, because they need us perhaps even more than we need them. Trump has the upper hand at this point. I don't know how he's going to play it, but at the same time, I believe China, for the very first time in a long period, is going to acquiesce to more conditions than they would have acquiesced to and agreed to even 6 months ago. That's the way I'm looking at it. Not only that, 88 of the 143 buildings over 640 foot high this year in 2018 were built by China. There's a new Celtic Tower is now the tallest building built in 2018. Nothing like the Burj Khalifa, but this is still Cetic, not Celtic, Cetic Tower, or Ketic. I think it's Cetic. Isn't that interesting? Right there, when it makes the top 8, let's look at CRM, because CRM is, of course, Salesforce.com. They built this beautiful building, but a brand new edifice, an ego, an icon to, I call it man's ego. It is man. Most of the time, men build these major edifices to their ego. And there it is. 181 was the high. It's going to be a little while, I think, before Salesforce becomes another cloud force. I think they're going to have to take a breather here, and that building says it should be early 2019 before they get their next legs, the big streak to the upside. That's my thinking. We'll see. CRM trading up $1.58 at 132.41. I'll be right back. Basil Chapman. Tiger conditions out. Dow's at 287. S&P's at 22.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So here let's go to interest rates. This is going to be very important. I just go to the XLU, which is this S&P Select Utility Spider Fund, makes an all-time high at 57.23 in November of 2017. I just love look, it pulls back. I don't know if it can call it a pullback. It just tumbles to the 47 area, actually 47.37 in February of 2018. And what does it do? Then it rallies all the way back and it goes to 57.18, 5 cents away from 57.18, 5 cents away from the high that was made over a year ago. How does the market know that? Isn't that incredible? Wait, no, it's exactly a year ago. So it was November of last year and November of this year, 12 months. And it goes to almost to the penny. How on earth? I always say horizontal fund managers always remember. It's diagonal that impresses me. That's why gold chart moving up like that in absolute proportion in a little mini weekly channel, peak A, peak B, peak C, and is in this beautiful up channel. It's a little narrow channel, but it's there. It's amazing. All right. So now, do we have the Chapman Wave drop bucket? Or is the S&P Utility Spider Fund about to collapse? Peak E in the daily. Leg F goes to an almost certain peak F this week unless something spectacular happens and it's able to get to 57.19 by Friday afternoon at 4 o'clock. I don't think it can do that. So what is the Fed about to do? Because look, this is kind of rate sensitive in a sense. Interesting, because to go with that, as I said to subscribers today, that Duke, which we owned once upon a time, hit a high 4 days ago of 77. I didn't put the number in. I think it was 77.25 or something. 77.19. Then it has a Chapman Wave 2-bar reversal. 77.14 the next day after a peak, making a peak F top, plunges down, and really not a very good day today, even though it's up 43 cents. And it's a leg F. There's this oval pattern, leg, body, neck. What is going to happen next? And not only that, the neck went above, and then it came back and retested the high that was made at peak D right there of 74.65, and it pulls back today to yesterday to 74.23. So it's almost accomplished it. This is going to be really important. What happens next? Because the technicals in the weekly chart are still good. The daily are not very good. But the weekly is still good and the monthly is improving. And what about the other stock that I mentioned, I think yesterday, and I mentioned to subscribers for about a couple, at least almost a week now, MKTX. I came across this, Market Access Holding Inc. It is capital markets, fixed income, electronic platform. It did the same as the utilities because look, it went to a peak F in the daily chart in a beautiful left side, right side price time match, and it goes to 231.33 on the 13th. It's pulled back very sharply from that. Today's low is already 214. That's a big move. And then look at the weekly chart. It makes a nominal new high, 229.84, and this one is 220. What did I say it was? 231.33, slightly above. Hasn't closed above that left side high. This could be another drop back. Is this a G or is this a brand new A? Is this a brand new start of a monthly move to the upside? I think it needs more of a breather than this. So we're going to be watching it. So I'm saying what the Fed does tomorrow is going to be very important because look at the TLT streaming up at the 119.41 level, up 23. Just extended that move. So this has to be now not a G but a C. Well, we'll see what it's going to be. Is it a G or is it a C? But the technicals are very good. MACD is good. Stochastics at 84%. Basically, it's restarted. That looks like you see the MACD didn't cross negative there. So that just goes to a plus sign. And that's why that should have been a plus E and a plus F. This is going to be a really important moment because two things. If the yields go higher and it impacts the TLT, the bonds, and bonds start to come down, the 117s is absolutely imperative for the TLT to hold on a closing basis. Otherwise, December is not going to look so pretty after all. Single leg up in the weekly, it's actually a leg B, but it looks like a single leg A because there was just one little brief peak A there. So this is leg B. Monthly was improving. Hey, I tell you, this is going to be really interesting. But what can the Fed do? The Fed is looking at data. It's looking at the market. It's looking at these other things. There's just no question that they're saying to themselves, if we were to raise rates right now, and then say we're going to raise them 3 or 4 times over the coming year, when we're looking at the housing market, HGX, which probably is having a rally today because everything seems to be trying to rally, HGX is up, 5.5 up 2.28%. Very good. Hit that trend line support, the Philadelphia Housing Sector Index. It's still an arch formation. The best case is going to be another arch. A lowercase h in the weekly goes to a lowercase m. So no matter how it rallies, I'm treating it just as a counter trend rally for now. So this is going to be very interesting because the home builders didn't do anything when rates were starting to come down over the last 3 weeks or so. Now all of a sudden they're perking up. So I'm saying that I think the Fed is going to ameliorate. They're going to talk soft. They have no reason to talk loud. They could raise, if they don't even have to raise, but if they raise, they could say raising, but there's a good chance that we're going to have to wait for a lot more data before we make our next decision. That pleases everybody. Okay, number one. Number two is, in terms of the yields, if you look at the yields, I suspect it's going to be much later on when yields start to break to the upside, maybe late 2019, maybe 2020, because this weekly chart with that monthly weekly chart peak G, very sharp pullback underneath the up channel support, leads us to the monthly, and this monthly of the TNX, the 10-year, has this whopper of a cup formation, as I showed my subscribers some opening call just over the weekend. Look, you've got a high of 30.36, it's 3.036%. In December of 2013, it plunges to 13.36 in July of 2016, and then it takes a shorter number of bars to break into the 31 area, and then it pulls back just mildly, and then it goes to 32.48 in December. Peak D in the monthly look, the last peak D saw a whopper of a pullback, more than cut in half the yields, the 10-year yields, and now the 10 years just had a little modest pullback, holding the 14-period moving average. I don't think the Fed needs to do anything. I think the yields are going to just do it by themselves. The yields are going to be pulling back. TLT can rally a little bit more. Now, the other thing is that when the market is starting to become really shaky, and you can see the money, the mutual funds have a huge increase in their value. Money just keeps pouring in. People taking out from stocks and putting into the money market. So money market prices, totals have gone up. Of course, not the yields are still pathetic. So this is going to be interesting because it seems to me that yields are not an issue right now, and that should benefit home builders. Let's see if Home Depot is actually rallying today. It's up 3 at 170.98. That's a good sign. It's a horrible chart, but it is a good sign. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 274. S&P's up for Wayne. I'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, if you're interested in reading just a fascinating book and getting some kind of perspective of different times, it's a book called One Summer, America 1927 by Bill Bryson. I'd mentioned it quite some time ago. It's really interesting. It talks about when the bankers met on Long Island, how critical that was. It talks about really 3 or 4 major meetings or events that occurred that set the pace for the 1929 top and then the crash. And if you want to know about interest rates, Ray Dalio, I think his name is, discusses article that I'd seen. I think he's got a book coming out. He discusses interest rates, and he talks about the match between what's going on now and what happened in the 1920s and 30s. There are so many parallels. It's just uncanny. That doesn't mean to say tomorrow we go through a depression. It does say be careful because we've got another big coda phase coming up at some point, and that's the one that you got to be careful of. It's where you want to actually be fully invested in the stock market and then start to slowly peel off as each level and the higher goes. And that's kind of the way we're looking at it. Start off slowly and then increase and then decrease. Okay, so in the meantime, back at the ranch, J&J, I was asked about it. What was the question? Yeah, could I just do an analysis? George from New York often calls the show and emails me, is interested in it. You know, the news, the talcum powder news, that is... We've known about that for a long, long time. And if it was purposeful, it is a terrible tragedy. And, you know, the cancer that came, resulted, so-called result of the baby powder issue. But actually, it's always way more complex. And if you get lawyers involved, it becomes even more complex. Let's just keep it as simple as possible. We have no idea what end results there'll be with you know, lawsuits, etc. Anything can happen. Let's look at the price of the stock. It goes to the daily. It has a double top, 148.75 back in November 20th of this year, and then it pulls back to the 130s, 139 area, rallies to 148.99 on the 4th of December in a cup formation. No, yep, in a cup formation. Pulls back, it makes like a miniature cup. It actually looks very much, I didn't want to do it. It's the pattern that they talk about. It's called the deadly diamond or the something diamond pattern. I've drawn it in so many times over the years, and I always chuckle and I say, "Oh, there's that diamond, the deadly diamond, or whatever it's called." Very seldom does it work out to be a proper diamond with the requisite absolute collapse below the left side low. Hey, in this case, it did. It worked out perfectly. And I was watching this. I saw this peak F. I saw the double top. But then I saw this rally here with the technicals not really confirming, but I couldn't tell if they were because I had to wait for another up bar in the MACD. And lo and behold, it tries to get back to the all-time high. It goes to 148.59, 40 cents off. And then what happens? It comes out with earnings, and it comes out with all this disappointment, and it plunders, and it goes to a low from the 148s 4 days ago. It goes to a low yesterday of 129. That's 20 points. That's big. What, 15% or something? So now what we're looking at is a move up 3 points today, 132.13. So George wants to know what's going on, the daily, weekly, monthly. So the weekly has this big cup formation. Just we've seen them over and over again. 148.32 in January of 2018, and in December, almost a year later to the week, at 148.99, it goes. It goes what, 60 cents higher. So it goes just higher, and then it collapses. So there's your cup formation. If you look at the monthly chart, you've got a right side failure in the MACD, the stochastics under 80% and 70%. So I'm going to say, George, I think most of the bad news is out, but I don't think that most of the bad news for the stock is completed yet. I suspect there's going to be a bit of a rally, but between 135 and 125, that's the trading range. I would not be surprised if it settles at. I like your thinking. I think this is going to be a great stock once again. Johnson & Johnson, JNJ, trading 131.88, up 2.74. I just hold off. I do two things. One is you look at leaps. I don't know if there are any leaps here. No, and number two is you are also able to use options, call options in this case. So I'm going to look at it a little bit in more detail. But I would suggest to you right here at 131.88, regardless of what happens over the next week, if you're looking at February or March, say a 135 call, that's the best way to start. The most inexpensive, I suspect it's kind of expensive, probably about $7 or $8. But that's the only way I would do it right now. That's a starter position. I don't know even if I'd say to you starter position, small here at 132, and you can add if it pulls back and it holds, or you can add if it rallies and it starts to build a good technicals. But right now, it's just a little early for me to do anything like that, other than to say to you, I'd look at the calls, but I'd go way out. I'd go February, maybe even March. I'd be prepared to pay extra premium just to allow me to think my position through, because even if it bounces to 135, I'm sure it's going to come back to 130 at some point. So you'll always have another chance. You don't even have to rush into this. That's what I'm thinking. But keep it on your list. I think it is a stock, but it needs time, maybe price to consolidate. Next thing I want to do is a couple of calls. Let me just do my usual Boeing question here. Boeing's up 14 at 330. So that's a good sign, but oh man, look at the chart. Boeing is not the place to be right now. I'm suspecting in January or February, I'm going to say Boeing is in, but maybe it'll go higher without me being in it, but I'm looking at it, I'm saying at 330, I want to see a retest of the 305 to 296 area. If that's successful, I'll start to look at it. So I'm going to leave it for now. Goldman Sachs, I bet it's having an update today, up 4.53. 172.54. Sometimes Goldman always needs bad news to get going. Yeah, this is a trough F, and the MACD is starting to turn up. The histogram's improving a little bit. Stochastic's horrible at 5%, and the weekly chart is just terrible. The monthly chart says to me 159 has been my very long-term target for Goldman Sachs, or very close, say 163 to 159. It's kind of a target area for my Goldman Sachs, where I would like to have it for subscribers. I start to look at it, let's put it that way. So all I'm going to say is that Goldman Sachs, nice day today, Whoa, it has to get above 183. It needs 10 points higher. And to close there, at least 2 out of 3 weeks for me to say, yep, now I think Goldman's ready to go. But for timing a low, your risk reward right now is good. If you got in early this morning or yesterday, I'd say the stop under yesterday's low has to be, you have to respect that. Next question is the XLF. Yeah, XLF is having a bit of a bounce today. It's up 0.54. It's lagging the indexes themselves. It's given back a chunk of the gains. Let's look at it together on Thursday because I don't even want to get in the way of the XLF. I think 2363, very close to the 200-period moving average weekly chart target that I've had for a long time. Let's see if it gets there. And remember, I'm thinking we're going to have a really good rally at some point, and then we have to do further testing before we can have a really big move in 2019. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
I'm Basil Chapman, and stay tuned for Steve. You've got Dave, you've got Tom O'Brien coming back here. So wait a minute, we've got the Dow 287 holding steady. Here's the E-mini futures. Just make it real clear. I'd be surprised if, unless there's some kind of news, if the E-mini goes back to from 2571 right now and really climbs over the 200-period exponential moving average in the 10-minute chart of 2576. And holds there into the close unless it's good news. My suspicion is to give back some. It'll be a waiting day tomorrow unless they're clues. And I don't know what clues you have to wait for. We've got a very, very negative. Look at crude oil. What are the Fed is going to... I just don't see... I think the Fed is just going to be very measured. I don't see any reason why they need to get carried away. Even if they raise, they're going to say, we're going to raise just this once. because that's based on the data that we've got. But looking ahead, we see that there could be mixed data. There's this and there's that and there's that and there's this. And that's the way I think they're going to do it. So that's one. And then as far as the, it's going to go right down to the wire. It's going to be the wall or the government partial, very partial shutdown. And when the market weighs it in, it's going to say, you know what, there'll be some kind of a compromise. There has to be some kind of compromise. We might have seen the low yesterday for at least this particular move. And anything that goes against that is going to say, oh, there goes the test of the low. And then we've got 23,300 as the big enchilada to be tested. I thought later, not sooner. So we'll see if that's going to happen. But in the meantime, I'm looking at this. I'm looking at some. I don't like some of the really big stocks, the way they've acted. Even here, look at Apple. Let's see what Apple's doing today. Apple could bounce, but I just don't think it's more than a bounce. That's all. Oh, no, that's AAL. AAL is American Airlines. I thought I'd notated that. Up today. Very nice. AAPL. So Apple is up 3.46. Look at that weekly chart. Not very good. Look at this daily chart. Not very. I just think that there's time. Some of the biggies need a pullback, and I wouldn't be surprised if something like the semiconductors actually have a nice counter trend rally in this particular move. We deserve a rally. And remember my cash index, Intas, Amazon, SPY, and Home Depot? Yep, they're still saying this is not a great scene what we're looking at right now. Hey, stay tuned for Steve, and I'll probably be back. I might be back a little later. But
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.